Profit First is a system that can have a tremendous impact for good on your business, help you manage your cash better, and feel more in control of your finances. It flips the script of sales minus expenses equals profit, where profit is just that leftover, just the remainder. We hope there's something there at the end. We want to turn that instead into sales minus profit. We're intentionally setting aside money for different purposes, for rewarding and paying ourselves, of course. It's a huge part of that. Then that sales minus profit equals expenses. But how do we get started? Starting the system can feel daunting. So that's what we're going to go over today. We're going to do what's called the Profit First Instant Assessment. And I'll walk you through how you can do that, how it leads into creating the system, the percentages that you want to get started with your business, and then also to identify the percentages that you want to achieve over time. So you've got your starting point, you've got where you're going to end up, how we can create a roadmap to get from where we are now to where we want to be. Let's get into it. What we're looking at now is the Profit First Instant Assessment, and this is in spreadsheet form. So we can plug in numbers, we can see where we're at, have it calculate our percentages, and then also look at where we want to go. What are those percentages? What does that mean in terms of dollars? And start to get a sense of this journey for us. And then we're going to map out how we get from where we are now to where we want to be. I have an actual Salon's numbers on my other screen, so I'm going to pull from that. How we're going to get this started is you need to pull up your financial data. Go into your bookkeeping software. For many of you, that might be QuickBooks Online, but if it's something else, that's fine too. If you don't have numbers, what you're going to want to do is to calculate to the best of your ability what each of these things are. That might be going through bank statements. It might be reviewing a month in great detail, and hopefully that's a good, a good sample of your whole year. But ideally, we're going to go into our software and we're going to pull a full year's worth. That's going to even out the seasonality. If we look at just the holiday season, we're going to look too high in terms of our numbers. If we instead looked at January through March, that might be a really low dry season. And so that's not going to serve us either. Ideally, a full year. So here we go. I'm going to start plugging in some numbers and we'll talk through this. The top thing that you want to put in is your revenue. This is the amount of money that's come into your salon. In this case, $854,508. Direct costs. We want to take out the direct costs. These are the things that are spoken for or spent almost as soon as the money is collected from the guest. So if you think about it, when a guest goes and checks out and they buy a product and they've had a service done, you know that some of that money is immediately needed to replace that product that they bought. Some of that money is needed immediately to pay that stylist. It's already spoken for. In this case, we're at $504,160. Not sure why our formatting is missing there. Okay, so then those are our direct costs. That will give us, by taking these two numbers, finding the difference, the real revenue. This is a really important term in Profit First. Real revenue is representing the amount of money that we have more control over, that we then get to assign to our profit and our owner's pay and our tax and our operating expenses. So now as we continue on profit, so this would be the amount of money that you have set aside for the purpose of rewarding yourself as a business owner. Using Profit First, that means in the form of quarterly bonuses. If we've never done Profit First before, this will start out as zero. And that's okay, that's normal. And so in this case, that's what we're going to put. This salon has not done profit bonuses yet, but that will change. Owner's pay. This will be the salary, ideally the net pay, if we can get to that number, for the owner, if they're on payroll, and or the distributions, so the draws that are taken out of the company for the owner. If you're an S-Corp, if that's your tax entity as a company, then you probably have both. If you are an LLC or a sole proprietorship, you may only be just taking draws. If you're not on payroll, that's you. You're just taking draws or distributions. In this case, the owner was able to take $50,000 salary and then also had $28,600 in draws or distributions during the year. So that's a total of $78,600. Tax. So this would be the amount of money that the business is paying for your income tax. This is not sales tax. This is not payroll tax. This is income tax. So think if you have to make quarterly estimated payments for your personal income, for your personal return, those would be in here if the business paid for them. And then if you file at the end of the year and you owe money and the business pays for that, then that would come in here as well. For this business, $6,400 was paid for tax returns or for taxes owed. And that's what we plug in. For our operating expenses, we're really just going to take the difference. We're going to take our real revenue. We're going to take out all of these other three. Basically, that real revenue, we're going to minus the profit and the owner's pay and the tax we're able to take from the business. Now we've got what our operating expenses are. This is going to give us 100% if we add all of these things up. And we'll calculate that right now. This divided by this. Let's see. Let's absolute that. Yes, that seems like a very handy autofill. Okay. So if we sum this up, we'll see that it goes to 100%. So currently with our business, we are at 0% profit, 22% for owner's pay, just under 2% is going towards tax, and then just under 76% is for operating expenses. What do we want to achieve? What can a business of our size actually achieve? That's what the TAPs are. And we have on this same spreadsheet a little table down here. So we want to look at what's our real revenue. Our real revenue is about $350,000. We come down to this table. Salon TAPs. That means target allocation percentages. Here's the ranges. Again, this is for real revenue, not for total revenue. Where do we fall? 350,000 falls into column B. That's between 250 and 500,000. So we know that our targets are 10% for profit, 30% for owner's pay, 15% for tax. Now it leaves us 45% for operating expenses. So we can come up here and we can plug in those numbers. We want to get to 10%. We want to get to, what was this? 30%, 15%, 45%. Okay. So those are our target percentages. It's very helpful to see what that means in terms of dollars. So what we're going to do is we're going to take that real revenue and we're going to times that by that target. So this times this. Okay. These should add up to 350,000, 348, 350,000, 348. Should add up to what your real revenue is. So this is letting us know that when we reach our targets, we'll be having about $35,000 of profit. We'll be having $105,000 of take-home pay. We'll set aside $52,000 of taxes, and then that will leave us $157,656 for operating our business. So that's the target. The bleed here is about calculating the difference. So we can take the actual minus the profit first. So we can see we need to have 35,000 more in profit. That's our gap. We can plug this in here too. We want to increase this. We want to increase, decrease. For our owner's pay, we want to be taking home 26,000 more than we are now. We want to be setting aside 46,000 more in our tax. In order for all of that to happen, we've got to lower our operating expenses by $107,000. This is the profit first instant assessment table completed. It does not really tell us yet what to do with that, but it lets us know where we're at and where we want to be. So then what we can do is we can create a roadmap. We can start to map out what that would look like for us to go from caps to taps. So on this same spreadsheet, we've got an initial rollout plan. And we can see that it has populated with our current percentages. 0, 22, 2, and 76. Rounding did happen because we want to be working with whole percentages. Most of the time, we're going to do this plan. We're going to go from our current place to our ideal place within 6 quarters. That's usually the best time. Some businesses can do it in 4. Some have a long journey and they do it in 8. Most often 6. So what we want to do is we want to start to play with how we can do that. And we want to do it incrementally. If we were to try to live our business according to the TAPs as of today, we'd fail. It would not happen. We cannot cut $107,000 out of our operating expenses in one day and expect our business to still function and be able to provide the things that it needs to for our team, for our clients, for ourselves. So we need to do this step by step. So what we can do here is we know that our profit needs to get to 10%. We can start playing with some numbers. I like starting small. Maybe we start with 1, and then we do 2, 2, 2, 2, 1. So we can see this right here is what we're going to increase each quarter, and then here in the gold is what it's going to be cumulatively. Our owner's pay, we know we want to get to 30. So it needs to go up 8% over those quarters. So we might have Some quarters that go up 1, some quarters that go up 2, and that will get us to our 30%. There's no magical way to do this. I'm just plugging in numbers and seeing, making sure it adds up to what we want and trying to spread it out so that we are, again, taking steps every quarter as opposed to trying to do everything all at once. So then for our income tax, we know we're at 2%, we want to get to 15. So this one, maybe we need to start a little bit more on this one. We're trying to get to 15. Let's just do this all the way across. Sometimes I do this. I can see, oh, that was pretty dang close. I just need a little bit more. So I'm going to come into this one that had only a 1 on owner's pay, and we'll put a 3 here. It kind of balances. So then what do we need to do on our operating expenses? How do we offset it? This one's going to be just following the math. We have 104% total right now, so we need to have -4, -6, -6. And they should be pretty consistent because of how we've set this up. -5, -4. And that's good that it kind of tapers down a little bit at the end as we get closer to our target. It can be harder. We've already got the low-hanging fruit, so now we're looking for some bigger opportunities. So this is a great example of a rollout plan. So what you would do is you would apply this. As of tomorrow, you'd start doing 1% to profit, 23% to owner's pay, 4% for tax, and you'd have 72% to operating expense. Going from 76% in our operating expenses down to 45% would be too much. To go from 76 to 72, that's doable. We can do that. We can make some changes. We can apply Parkinson's law by limiting the amount that we have available to us. We're going to adapt. We're going to use our natural brilliance and creativity, and we're going to make it happen. We can also kind of see here, I like to have this listed out. Our current owner's benefit, which is profit, owner's pay, and tax, all added together, is $85,000. That's 24% of our real revenue. We really want that to be 55%. Which for us is going to be almost $193,000 of owner's benefit. We want to increase that by over $100,000 over this journey. That's amazing. That's great to see. It's not going to happen overnight, but it's good to see that the reward is going to come, and it's going to come incrementally. We don't have to wait 6 quarters for it. We're going to start to get some now, get a little bit more the next quarter, a little bit more the next quarter, and over time we're going to increase our owner's benefit by almost 200%. That's almost tripling the owner's benefit. That's going to conclude this video where we're going through a profit first instant assessment. You can take your own numbers, plug them in, follow this same process, and you will have your initial rollout plan for profit first. I'm going to follow this up with another video where I will go through how you can create a calculator that will help you know how much to move into each of these accounts. We're going to talk about the cadence, how often to do this profit first transfer of money. We'll talk about some of the common pitfalls, some other tips that I have, so that as you actually implement, this is kind of the groundwork, the foundation. And as we go through and we start to implement it and move the money and live in this profit first cash management system, how we can do that successfully, how we can make sure that we keep the momentum going, capture all the benefits, and get the value for ourselves in our business. We want to get to that place again where our business is serving us and it's making us happy, and serving our clients and our community and our team members and all of those amazing things that a business can and should do. So we'll get to more of it in the next video.